Hello everyone, I am Dr. Sarika Makol, Associate Professor in Saga Group of Institutions. In this video, we'll talk about Sensex, that is Sensitivity Index of BSE Exchange in the subject Security Analysis and Investment Management of MBA 3rd Sem. So here we go. Now, first of all, we should understand what is the meaning of Sensex. We call it as sensitivity index also, and this term or this index we'll use for Bombay Stock Exchange. So it consists of 30 largest and most actively traded stocks representative of various sectors. Basically, this index contains top 30 companies of Bombay Stock Exchange, which can be regarded as top 30 on the basis of most actively traded stocks and which represents various sectors. So these companies account for around 1/5 of the market capitalization of the BSE. And the base value which we use in this Sensex is 100 on April 1, 1979, and base year will take as 78-79. Now, first of all, when this Sensex is launched, so it is launched on, or it has been calculated on the basis of full market capitalization method. But from September 1, 2003, this calculation method or the value, Sensex value, will be calculated now with the help of free float market capitalization method. Now, what is the meaning of free float? Free float method means that it does not include those restricted stocks such as those held by promoters, government and institutional investors. Why? Because these are restricted because they are not tradable in the market. Actively tradable stocks are not these stocks. So that is why these are termed as restricted stocks. So will not include the value of these stocks while calculating the market capitalization of the top 30 companies. Now we come across one definition of Sensex, that it is an index. And what is this index? It is basically an indicator which measures the performance of various stocks in BSE stock exchange. It gives you a general idea about whether most of the stocks have gone up or most of the stocks have gone down. It is basically an indicator of all the prices of the major 30 companies which we select on the basis of market capitalization method of BSE, that is Bombay Stock Exchange. Now, these are the various objectives of sensitivity index or Sensex. It helps in measuring market movements. Market movements here means that whether the market is moving up or down as per the fluctuations or as per the conditions in the current market, in the surviving market. Then it serves as a benchmark for funds performance. With the help of the sensitivity index value, we can just find out that what is the performance of the funds invested in the stock market or in the various companies. For index-based derivative products like options, futures, forwards, this will be an indicator that in which company one has to invest or in which company one has not to invest. Now the main point is how to calculate this Sensex. As I have told you that nowadays the method which we are using to calculate the Sensex value, that is free float market capitalization method. Now what is the Sensex value? Like you will see that nowadays the Sensex has been gone up to 35,000, then it will definitely fluctuating day by day. So that Sensex value how that value will come out. So that calculation will be done with the help of these steps. You should know about that steps to calculate the Sensex value, which will come across in front of us daily basis. Market capitalization, the first step is the market capitalization of each of the 30 companies which can be included in the index has to be firstly determined. And that determination will be done on the basis of various parameters. One is that we have to select those companies which have mostly actively traded stocks. Then the growth rate is high since so many of years, that stocks of that very company should be high in demand, that sector should be high in demand, only then that should be included in that very 30 companies. and the main criteria is the market capitalization. Then the market capitalization should be multiplied with the free float factor, which is given, which has to be given, which has a chart to derive the free float market capitalization. Then this free float market capitalization of the index constituents is then divided by the number known as the index divisor. So this is a three-step procedure for calculating Sensex. To make you more clear, I'll just show you the example how to calculate this Sensex value on the basis of these three steps. As you all know that market capitalization is what? It is the aggregate valuation of the company or multiplication of the outstanding shares with the current share price of each company. Now see the example. A company has 20 million outstanding shares, for example, and the current market price of each share is 100. So the market capitalization which comes is 200 crores. Now the stock of the companies are of three types: large cap, mid cap and small cap. But there is a criteria to divide the stocks of the companies in these three types. The stocks with the market cap of rupees 10,000 crores or more are called as large cap stocks. Market cap between rupees 2 crores and 10 crores are mid cap stocks. Less than 2 crores are known as small cap stocks. But this criteria is not at all a fixed criteria. This keeps on changing as the market changed. So we cannot say that this slab is the fixed one, right? Now, free float method, the method by which the market capitalization of an index underlying companies, means 30 companies, is calculated. Now, what is free float and what should be excluded? As in the previous definition, it is being mentioned in that there are certain restricted stocks which is not included in this free float method. So now what are those restricted stocks which should be excluded from this method? So these are these stocks or shares. First, shares held by founders, directors, acquirers, which has control element. Shares held by persons or bodies with controlling interest, because those shares are not at all tradable in the market. Then shares held by government, which can be served as promoter or acquirer. Holdings through the FDI route. The shareholdings which you have or which that company is having through FDI route, that should be restricted from the free float method. Strategic stakes by private corporate bodies or individuals. Equities held by associate or group companies, which are known as cross holdings also. Equities held by employee welfare trusts. Locked in shares and shares which would not be sold in the open market in normal course. So these all categories of holdings are generally excluded from the definition of free float method, because these are not at all tradable in the market. Now I talked about some free float factor. So this is the bands. As per that, the free float factor has been given by the SEBI. Percentage of free float is, these are the slabs: 5% gap, 0 to 5, 5 to 10, 10 to 15, and these are the free float factors given, that is 0.05, 0.10. Then percentage free float factor, if your free float factor lies between this percentage, then what would be your free float factor? If it lies between 50 to 55%, then your free float factor will be 0.55. Similarly, if it lies between 80 to 85%, then it will be 0.85. So these are the free float bands given by the SEBI. Now see the example, how would you calculate this free float market capitalization? See the example, if a company has a float of 10 million shares, float of 10 million shares means that these 10 million shares are actively traded in the market, and total outstanding shares of 12 million, which includes those categories also which are excluded from this 12 million and called as 10 million shares. The percent of float to outstanding is 83%. So this we have calculated on the basis of 12 million shares, outstanding shares divided by 10 million shares multiplied by 100, that comes to 83%. So now see, if a company is having 83% free float, so it falls in which category? 80 to 85%. And in front of 80 to 85% float, you might see that the free float factor is 0.85. In front of 80 to 85% float, it is 0.85. So now the 0.85 now have to be multiplied by its market cap, and the market cap will be 12 millions, means outstanding shares multiplied by the current market price, that is $10 per share. So it comes to 120 million. That is the market capitalization only. But when this market capitalization will be multiplied by the free float factor, so here comes the value which is free float market capitalization, that is $102 million. That is free float market capitalization. So this is the procedure how you have to calculate the free float market capitalization. As simple as that first of all you have to find out the market capitalization by multiplying total outstanding shares with the market per share, current market price per share. Then that has to be multiplied by the free float factor, which comes after calculating the percentage of free float between outstanding shares to free float shares, right? So this is the method to calculate free float capitalization. Now, what are the advantages of free float? The basic advantage is it depicts the market more rationally. Why? Because now we have just excluded the non-tradable shares or restricted shares from the calculation part. So now we can depict the market more rationally. It removes undue influence of government and promoters, as we have just excluded those shareholdings. Almost all the indices over the world are calculated by this methodology, so it becomes a kind of a synchronization or same for all the countries. It gives fund managers more authentic information, because when we just exclude those restricted shares, so it gives more authentic information to the fund managers, and they can take very rational decisions while making their investment. So this is just the free recap of the Sensex calculation. The first is find out the free float market cap of all the 30 companies that make up the Sensex. Secondly, add all the free float market caps of all the 30 companies, because earlier I have just shown you the calculation of one company. Similarly, you have to calculate free float market cap for all the 30 companies, top 30 companies. Then make all this relative to the Sensex base, that is 100. And the value you get is the Sensex value. So this is how you can calculate the Sensex value, on the basis of which you can judge that whether the market is moving up or down. So I hope the concept of Sensex as well as the calculation of Sensex for the BSE exchange is clear to all. Thank you all. Thank you so much.